Okay, buckle up everyone. We've got a wild ride in the markets today, all thanks to a good old-fashioned trade war brewing between the US and Canada. It's like a financial roller coaster, and trust me, it's been a crazy day trying to keep up with it all. So, what sparked this whole thing? Well, Canada floated the idea of slapping an electricity export charge on the US. Think about that. Michigan, New York, Minnesota, all potentially paying a premium for their power. Naturally, that didn't sit too well with a certain former president who responded with the threat of raising tariffs on Canadian goods. Boom! Market dip. Then Canada backed down, saying, okay, we'll remove the electricity charge. Cue a brief market rally as everyone breathed a sigh of relief, hoping for peace. But then, the former president came back and said, "Thanks, but we might still raise tariffs anyway." And down goes the market again. It's a whipsaw. Investors are scratching their heads, especially after we saw some of the worst market days since 2022. So, let's unpack this craziness, starting with some dates. March 4th. Tariffs come back on Mexico and Canada with the additional tariff on China. March 6th. Tariffs paused on goods and services that are compliant with the United States, Mexico, and Canada trade agreement for one more month. Yesterday, Canada announces electricity charge, then Trump threatens tariffs, then Canada backs down, then Trump says, maybe tariffs anyway. It all started with a 25% tariff on goods and services from the United States, $30 billion worth of stuff in total. Things really escalated when Doug Ford, the Premier of Ontario, basically the governor of a Canadian province, went on CNBC and straight up threatened to cut off electricity to the US. He said, and I quote, "Is a shut-off a tool in the toolkit?" 100%. And if he, Trump, continues to hurt Canadian families, I won't hesitate to do that. Can you believe that? Talk about high stakes. It's like a real-life game of chicken with the economies of two major countries. And this is where it gets tricky. It's a roller coaster. I had to record this video multiple times because the news kept changing. So, what does all this mean for you, the average investor? Well, I want you to take away a few key things. 1. Stay informed, but don't get overwhelmed. There's a ton happening, and it's all happening fast. 2. Keep calm. Seriously. Emotions are the enemy of profits. When you start panicking, that's when you make bad decisions. There's anger, excitement, fear, all swirling around. Wall Street knows this. They're not paying attention to the emotion, they're paying attention to where the money is moving. 3. Think like Wall Street. Follow the money-savvy investors want to own a piece of the economy, especially where the economy is going. Any major change, a new government policy, a groundbreaking technology, or yes, even a trade war, means money is going to shift. So instead of getting caught up in the politics and the anger, ask yourself, where's the opportunity? 4. Know your investing strategy. Now, this is where it gets personal. What's your investment strategy? Are you a long-term investor or short-term investor? Long-term investor. Long-term investors don't care about the day-to-day, they care decades from now. As a passive investor, you are just investing in the American economy, and when the economy doesn't perform well, it is a great opportunity to buy. Short-term investor. Short-term investors focus on the short term, and that's okay too. It all depends on your risk assessment and goals. The bottom line is this. If you're a long-term investor, meaning you have years, if not decades, in your investment horizon, these day-to-day swings really don't matter that much. You're investing in the overall strength and growth of the economy. And let's be real, every time we go through a downturn, we hear the same things. This time is different. It's not going to recover. I need to get out while I still can. We heard it in 2022 with the debt crisis, in 2020 with the pandemic, in 2008 with the financial collapse, and in 2000 with the dot-com bubble. But the investors who tuned out the noise and found good opportunities were able to buy great investments at a discount. Think about it this way. Investing is the only place where people run away when things go on sale. When Macy's has a sale, people line up around the block. But when the stock market has a sale, everyone panics. I get it. It can be scary, especially if you don't have a ton of experience. But if you believe in the long-term health of the economy, these short-term dips are just opportunities. Disclaimer: I'm just a random guy on YouTube, not a financial advisor. Investing has risks, and you can lose money. Always do your own research and don't blindly trust anyone on the internet. However, you got to know the game if you are investing in the American economy. We've all seen it, right? The market goes up, the market goes down. It can be pretty scary. In 2022, the stock market dropped 20%. In 2020, we saw nearly 40% drop. Back in 2008, the whole financial system was on the brink. And who remembers the dot-com bubble bursting in 2000? The Nasdaq got absolutely hammered. But here's the thing. These dips, corrections, even crashes, they're actually opportunities in disguise. But how do you take advantage of them? Well, you first have to know what kind of investing game you're playing. Are you a passive investor? Do you just want a piece of the American or global economy and chill? If that's you, then your strategy is simple. Consistently buy. Like, set it and forget it. Dollar cost averaging, people, the day-to-day noise, ignore it. There's always going to be drama in the markets, lots of political or tariff things happening, but if you're in it for the long haul, you don't need to stress on the short run. Think of it like this. When there are sales, down days, it's like your favorite store having a huge discount. You get more for your money. Nobody knows when the bottom is. Nobody has a crystal ball to predict market crashes. But lower prices mean better buying opportunities. The key? Know your investing strategy. Now maybe you're thinking, nah, I want to be more involved. I want to see the niche opportunities. That's when you start paying attention to what I call market shifts. This means diving deeper, looking at specific companies, reading their earnings statements. Where is the real money going? When there's chaos, there are even more opportunities because money is moving fast. Now, I'm not talking about day trading. That's a completely different game. Trying to make money in that way is, to me, closer to gambling. What I'm talking about is long-term investing, finding awesome companies that have been unfairly beaten down because of market fears. But this takes guts. You need emotional confidence. Stay calm and collected. Don't panic sell. Capital. You need money available to invest, not locked away. Strategy. Know if you want to be Mr. G and Ms. Passive Index Fund, or if you're going hunting for specific companies. Execution, you have to do it. Yes, it's risky, yes, it's scary, but remember, you're in it for the long game. If you bought a house, would you check Zillow every hour to see what the price is doing? No way. A house is a long-term investment, and you understand that. But with stocks, it's so easy to get caught up in the minute-by-minute changes. That's what makes people buy high and sell low. So please, for your portfolio's sake, step back, understand what's happening. Don't let emotions rule. Look, I get it. Keeping up with all of this is hard. I have a whole team helping me, but it's critical to have resources. Read press statements, but honestly, that takes time. And of course, I'll do my best to keep you updated here on the channel. So, let's recap. Develop these skills. Stay calm. Meditate. Breathe. Whatever it takes. Keep saving. Consistent investing is key. Know your strategy. Passive or active. Build your education. Never stop learning. You will make mistakes. It's part of the process. But remember this. Recessions and market crashes create more millionaires than any other time because they allow the financially savvy to swoop in and grab great investments at bargain basement prices. Some of the best investments I've ever made came through the 2022 downturn, the 2020 pandemic crash, and the 2008 financial crisis. It's tough because you're doing what everybody else is running away from. But trust the long-term health of the economy, and you can turn those scary downturns into incredible buying opportunities. That's it for today. Do you like our video so far? Please like and subscribe to the channel, and I will see you on YouTube tomorrow.